Right now, as of 9:49 a.m. Eastern Time, shares of Rezolve AI, ticker RZLV, are trading at $4.14. That's a very slight dip on the morning, down about 3 cents or just under 0.75%. The stock opened a little higher at $4.20 and has been trading in a tight range between $4.07 and $4.24, with volume just starting to build at over 815,000 shares. But let's be perfectly clear. That small intraday tick is not the story. The real story, and the thing that should make anyone looking at this stock pause, is the disconnect between the company's $1.34 billion valuation and the $3.16 million in revenue it reported in its most recent quarter. That isn't a typo. A company valued at over $1 billion is pulling in what a mid-sized car dealership does. This is one of the most aggressive story stocks on the market today, and the tension between the narrative and the numbers is everything. If you've been following the headlines, the expectation is that RZLV is sitting on the next big thing in artificial intelligence. The company is a pure play on what it calls Agentic Commerce. The idea is that in the near future, you won't shop online. Your personal AI agent will do it for you. It will find the products, negotiate the prices, and make the purchase, all autonomously. The narrative got a massive shot in the arm just a couple of days ago when Amazon's CEO, Andy Jassy, specifically named Agentic Commerce as the next great transformation in online retail. You could almost hear the champagne corks popping at Rezolve's headquarters. Their entire business model, which they've been working on since 2016, was just validated by the biggest player in the game. This isn't just talk. The company is acting like a major player. They just closed an oversubscribed $200 million financing round. They are using that capital to go on a hiring spree, poaching a former Microsoft executive to build out a massive sales force of 40 people in the US and another 30 in Europe. They're making acquisitions like SmartPay and Subsquid to build out the payment and data backbone for this new AI economy. They're touting strategic partnerships with both Microsoft and Google. When you look at this from 30,000 feet, you see a company that looks like it's building the infrastructure for the future of shopping. It has the buzz, it has the cash, and it has the validation from the top. For many people doing their online investment research, this looks like a chance to get in on the ground floor of something huge, like buying Nvidia stock a decade ago. But then you have to look at the reality. You open the hood and the engine is still in pieces. This $1.34 billion valuation is resting on a financial quicksand. That $3.16 million in revenue came with a staggering net loss of $28.93 million. Their net profit margin isn't just negative, it's a black hole at negative 915%. The company has negative total equity, meaning its liabilities are greater than its assets. This isn't a functioning business. It's a high-concept research project that is burning cash at an astonishing rate. That $200 million financing round wasn't a victory lap. It was a "we will cease to exist without this" lifeline. The entire company is a bet. It's a bet that the story they're telling will turn into actual signed revenue-generating contracts before that $200 million pile of cash burns down to nothing. This fundamental conflict is why the stock chart for RZLV looks like an EKG. The 52-week range is a chasm, stretching from $1.07 to $8.45. This is not a stock for a Schwab Intelligent Portfolio's set-it-and-forget-it account. This is a high-volatility, high-risk, high-stress asset. You can see the narrative at work in the stock's recent history. When the company reported its Q2 results in October, it actually missed its revenue forecast by over 27%. Normally, that would send a stock plummeting. But in the same call, management raised its guidance for annual recurring revenue, ARR, to $150 million. The stock popped. It doesn't matter that the actual revenue was a miss, the story of future revenue got better. This is what you trade on the Robinhood app or through SoFi Invest if you have a high tolerance for risk. It's a pure sentiment play. What you're seeing is a battle between professional traders and retail investors. The institutions see the press releases and the retail excitement and are happy to trade the volatility, while many individual investors, perhaps using platforms like Fidelity or Interactive Brokers for their self-investing, are buying the long-term story. They're looking at Tesla stock or Apple stock and thinking this is the next one. But RZLV is not Apple. Apple has hundreds of billions in revenue. RZLV has a great presentation. This is why having some investment help or using investing sites to see the full financial picture is so critical. You have to separate the company's press releases from their SEC filings. So, what does this company actually do? It's important to be clear because there's another private company with a similar name. The public company, RZLV, is based in London and is focused 100% on e-commerce. Their platform, Brain Commerce, is a suite of tools that includes conversational AI, visual search, and an AI-powered checkout. The pitch to retailers is simple. Integrate our tools, and your customers will get a personalized, autonomous shopping experience that will dramatically increase sales. They are trying to sell this vision to major retailers, and that's where the new Microsoft exec and her sales team come in. Their job is to turn that $150 million in guided ARR into signed contracts. The company itself has stated that the conversion time from ARR to actual recognized revenue is a long 7 to 9 months. That's a lifetime in the AI space. This brings us to the future outlook. It's a binary outcome. There are two paths from here. Path 1 is that the sales team, flush with $200 million in backing, succeeds. They use the Amazon CEO's comments as their primary sales tool, walk into the headquarters of major retailers, and start signing massive multi-year contracts. The market sees this, the revenue starts to flow in 7 to 9 months, and the $3 million quarters become $30 million, then $100 million quarters. If this happens, the $4.14 price will look like an absolute steal, and the $1.34 billion valuation will just be the beginning. The people who bought this through their individual brokerage account will have caught a true 10-bagger. Path 2 is the one that keeps the CEO up at night. The sales cycle is too long. The technology is too hard to integrate. Or, even worse, Amazon wasn't validating Rezolve, it was announcing its own intention to compete. What if Amazon, Google, or Microsoft, who Rezolve calls partners, decide to build their own, better agentic commerce platforms? They have the engineers, the cash, and the existing retail relationships. In this scenario, Rezolve is a small, independent player that just telegraphed the entire playbook to the 800-pound gorillas. The $200 million gets burned on sales salaries and R&D, the big contracts never materialize, and the company finds itself in another cash crunch in 18 months, only this time the story is old. This is the ultimate test of expectation versus reality. The market expects this to be the future. The reality is that this is a cash-burning startup that just got public market funding. Comment below with a yes or no. Do you believe Rezolve AI will sign a major enterprise contract before their $200 million in new funding runs out? In the end, the situation with Rezolve AI is a perfect microcosm of this market. The expectation, fueled by a powerful narrative about AI, validation from industry titans, and a fresh $200 million in the bank, is that this is a ground floor opportunity. The reality, found in the hard numbers of its financial statements, is that this is a company with massive losses and almost no revenue, valued at an astronomical $1.34 billion. The stock isn't trading on what the company is, it's trading on what investors hope it will become. And as we've seen with countless other story stocks, the gap between that hope and the balance sheet is where fortunes are made or lost. Would you like me to look up the latest analyst ratings or price targets for RZLV to see what the professional